The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends, do we go.
The following takes place between 2 p.m. and 3 p.m.
And it is yet another day into the breach we go. And always between 2 and 3 p.m. we meet to talk about market and market conditions. Anyway, we're up at off about 2 points on the S&P cash. We were down to 2083 on the S&P. I don't know what else you can say about it. They're going to try to push this market back up. 2.72 billion shares already. And the question is, I guess we got numbers this morning that don't leave any wiggle room for the FOMC meeting in December. They would need to raise or they're liars. And that's pretty much it. So we kind of pulled down this morning. Everybody's saying, well, the market can handle it now. I just don't see a lot of upside, especially with the dollar index. We've got it up here at $1.23, but kind of flat on the day. Let's call it 2 points off on the S&P cash. The question is whether they can hold this up for more than a few days. My guess is that we're going to have this kind of back and forth, down 5, maybe down 10 points, bouncing around, maybe up a little bit, down a little bit, all the way to Thanksgiving. But I think we've broken 2,100 unless we get some kind of sign of strength in this market. I think we're pulling back into Thanksgiving. It's not going to be huge. The wheels are not going to fall off the wagon all at once, but I think we're going to be pulling back. But I think it's going to be long. I think everybody wants and thinks the market's just going to snap here. I do not think so. I think it's going to be long and drawn out. I think if we've got any snapping to do, it'll be at the beginning of next year, especially with the gamblers that are back in the markets. We see many stocks either up or down 25% after markets, especially at night, not so much during the day. That tells me that the gamblers are back in town. And the excessive volatility brought by those generally does not last very long. In the meantime, it's time to get this party started as usual. So let's get moving.
That it's all just a little bit of history repeating.
On this day in 1609 or 1906, dyslexia cure for found, by the way. President Teddy Roosevelt embarks on a 17-day trip to Panama and Puerto Rico, becoming the first sitting president, to make an official diplomatic tour outside the United States, or at least the continental United States. And kind of interesting. Now it's not uncommon. The president fuels up a 747, uses more fuel and spouts out more CO2 than I will ever in my life, going over to some to-do. Maybe that I think the next one's in Paris or something. But, it'll be one of those things where you use more jet fuel and spew more carbon dioxide than most humans will if they tried all of their lives. But now it's a common thing, isn't it? It is what it was. But it started on this day in 1906, where we started going abroad and becoming the big stick. Was it Roosevelt? Was it that Roosevelt that talked about talking softly but carrying a big stick? I think that was him. Now we have a wet noodle, and we basically throw feces at our friends. What else can you say? It is a mad, mad market. We're going to get right to what's going on in it. Did I already get that? Yeah, I did. I just wanted to let me get something else here up and going. What was it? TRP. That's what it was. I wanted to take a quick look at it. No, I don't want to do that. I want to get my charts. Where's my charts? There they are. TRP. Of course, the president came out against the pipeline finally after 8 years of trying to delay it. Actually killed it today. Trans Canada Corporation. And the president did today what I thought no other president could ever do, and that is get Canadians mad at us. Probably the nicest people in the world, who now are well, I think they were the last people that actually liked us. Everybody else is wondering what else happened to us as a country. Now it's complete. Everybody hates us, especially anybody involved in energy production in Canada. Down fairly strong volume already today. What was it? 1.7 million shares. Things weren't great already in this sector, but doesn't look like this is going to help them anytime soon. But I think you can make a great case. What is this candle over here? On the 5th of October, 2.1 million shares. We're into that 1.7. So we're easily going to get that 2.1 million shares back in here. So we'll be in that candle of the 5th, and most likely maybe back down to $30.60 on TransCanada Corporation and their pipelines. But we will figure that out as we go. Other things going on. Let's take a quick look at here. We're still off 2 points on the S&P cash. 2.7 billion and 2.76 billion shares. But we're still off 2. We'll see whether or not they can push this market up late in the day, but going to be tough. Was that the Monroe Doctrine in South America? Big stick? I think so. Can't remember now. Buford Busser. Steve Rhodes thinks it's the guy. What was that? Walking Tall, wasn't it? That the movie? Anyway, we've got other things going on out here. But again, still not, is this correct? I'm not wondering about everything here in my internet connection. See if it's right. Huh? It is. Just hadn't moved. The market's been at least ticking up a point or so, and that it's gone kind of flat out here has got me interested. Okay. Other stocks that I wanted to look at, let's get to those very quick. We got a lot of movers out here today, and earnings Friday. Okay. Of course, a lot of movement in the semis today. Wanted to take a quick look and see whether we have any volume or movement in these. We'll go through them as fast as possible. Avago had a nice day up here today. The volume so far is not confirming that we're out above the October 23rd high. That had 3.5 million shares. We got 3.2. I guess we're going to get into that candle with at least 3.5 today. So that maybe tells you a little something. They are the biggest supplier, of course, for the iPhone. So you got to have to keep a look at them. Of course, right after afternoon, about 12, just maybe 12:05, 12:10, something like that. Famed short seller Jim Chanos had come out and said that he was short and was shorting Alibaba, that he was saying just about everything that I've ever said about China, and that is their earnings are going to be questionable at best and total frauds at worst. I like Chinese, but I don't like their stocks. And down on significant volume today, he's offering another, I think it's JP.com, as a stock to hedge against it, long in China. But I think he's got something here, and he's probably one of the best guys with a pencil. He's got a lot of people that work for him and find stuff out. But I think the real problem you have is how is he short this thing? My guess is that they could just say his short shares are worth nothing. That may be the way China works these days. But I don't know. It's just hard to see how you can make any money long or short in China when it just seems to me that they'll steal any of it when it comes down to it. They believe that our money is their money, and whatever it takes, hook or crook, they will take it. We don't have a great record to brag about in the financial street, but I somehow have a feeling that we're going to be about 10 times better when all the books are written about this period of dot-com bubble in China. Anyway, down a decent volume out here. This thing did pop up on 50 million shares on the 27th, and it is out here on 29 million shares to the downside already. I think it would be kind of easy to see that in the last 2 hours we get enough volume to at least match that. My guess is that if you ever see Jim Chanos speak, is that he's assuming that he's going to be short this thing a year or two. He's not expecting instant results, which is pretty much everybody that we talk to here at TFNN. They want to know how much money they made in the last 1 minute bar. He's probably thinking more in the lines of each quarter and maybe each half a year. And probably we'd think that he's trading on a glacial timeline compared to anything that we do here. But, you know, this thing did get up, did have kind of interesting volume up there at the highs. A doji yesterday, pullback today. I don't know if you can say anything more about it. I'm sure he'll have conferences on it and talk about exactly where the problems are in Alibaba, but I'm sure that they will be big. Of course, other stocks to the downside, BHP, the rig count was down another 6 points today. And anybody that's involved in either any big commodities business is at least seeing retests of the low. 5.9 million shares today. It hasn't quite broken the September 28th low on BHP, but my guess is that we'll have the 7.9 million shares on this gap down today, and we'll look for it on Monday to see whether or not we've got anything more coming out of this. Let's see. Oh, now we're down 5 points in the S&P cash. This market's going to be all over. It's not a bad-looking chart. Unfortunately, we talked about this pattern, mid-August, and that is the stocks hang around the lows with light volume, and then the next day you find them gapping down again. In fact, yesterday, I don't think you could have really looked at a gap down off the volume wasn't incredibly light, but it's been kind of light the last few days in BHP, and it seems like light volume ends up with a gap down many times. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Page, Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Had a quick email and wanted to look at Expedia today and what I thought of it. Of course, just had earnings, popped up fairly decently on this. It's now kind of starting to come back, and a great deal of that is C-Trip. I suspect this is a pattern we'll be looking at, and we'll talk about the next stock that I want to look at after this, where I think we're looking at a pattern that will look close, and that is these things did gap higher, but I have a feeling a lot of them are going to pull right back in to their trading range, Expedia being one of those. The reason why? The dollar. On Expedia, of course, all about travel. Probably going to see a lot of consternation. And last time the dollar really took a run up, really saw a lot of pressure on Expedia. Of course, they're buying away and some other stuff, and a lot of people got wrapped up into that. But not a lot of volume down today. I'm not saying short it, but I suspect we're probably going to see some highs somewhere in this. And kind of looking at Facebook and the way it acted, I also think that we could see some of that maybe Monday on Facebook, and that is that these things gapped up, took a lot of shorts, cleaned them out. Now there aren't a lot of natural buyers, and kind of light volume out here today at 27 million shares compared to 63 million shares. But I think a lot of these could very quickly come back and fill these gaps. And as we do that, it would be interesting. Somebody said they lost my chart. I lost my chart. Anyway, we'll pop it back up there. I don't know why they lost my chart. Anyway, we were looking at Facebook, but you know, a lot of this was on TripAdvisor's and their earnings last night. And this is what's so hard about some of these stocks. You can maybe trade them intraday, but boy, these the gaps up and the gaps down are absolutely brutal in a lot of these stocks. And of course, TripAdvisor, pretty big exposure in foreign countries, and that's the exact same problem that we're seeing in Priceline, Expedia, and the others. In fact, was PCLN. I think it was on $20 or $30 earlier today. Nice breakout. Everything was wonderful, but now what we're going to have is pretty big headwinds back in here. I'm not going to be surprised to see these, including Priceline, pull back in back below their previous highs. They may not be shorts, but I have a feeling that that August 5th high is probably going to get this thing's probably going to pull back in it over the next week or so, maybe even to Thanksgiving. Again, a lot of that is problematic with the dollar. Of course, the stocks up fairly strongly on some nice earnings. SWKS. We talked about Avago, Skyworks Solution, nice pop on it. What we don't have, though, in a lot of these is volume, and that's, with a nice gap like this, you should be expecting a great deal more volume. We're really not getting it in some of these. And I actually wrote a newsletter this afternoon where I'm going to spend probably the whole weekend. I think the close today is going to be incredibly enlightening for what we have the next 2 or 3 weeks. But I think we are going to have to get right into the end of the day to get anything of value out of the charts. I think a lot of this intraday noise may be created for other purposes other than actually real trading. I think they're trying to keep this market up a little. Out of nowhere is one of the stocks from a blast of the past. And I don't know why I didn't follow this stock mostly, but I listen to a lot of podcasts. And it seems like Stamps.com is one of the biggest advertisers on podcasts. And I'm wondering just how effective it is. But apparently, if you go by earnings, it is very good. These, if you're not familiar with these people, they keep you away from the shootings, mass shootings at the post office. Although we don't have a lot of going postal anymore. It seemed like maybe, was that like a 90s thing? Or maybe even 80s? I think it was 90s. Anyway, I can't even remember. It's been a long time since anybody truly went postal. But it's still used, isn't it? But Stamps.com went postal. Boy, did they. Huge volume, 1.4 million shares. But, I tell you what, I could have looked at this stock either way. So I'm not going to say that I would have gone long this thing, but you knew just this real tight band of sideways action. Going back to October 8th, this thing went from all the way October 8th, went a month of nothing but narrow trading range. Boy, these things are wound up when they do explode. Anyway, I'll be keeping an eye on this one a lot more in the futures. STMP is the symbol on it. Don't tempt fate. I won't. I'll shake my fist at it.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Now we're off 6 points in the S&P cash, so I don't know what you can say. Just if you are either long or short and you're happy or sad, just wait a couple. Oh, now we're down 7 points. This thing's just getting jumpy and weird, and that's what always makes me think that this market could have some significant downside. I still suspect that it will be slow and moderated, and that the Fed and the Treasury will do everything it can just to slow it down. They know it's going down, I think. But I think that they also want to make sure that it goes slowly, at least for a while, so that they can boil a lot of the retail investors, frog boil them. Don't want any of the suckers to get out easy. And at least that's my thought at the moment. Corvo, we looked at that. Of course, again, I would think we got these stocks. There's a lot of short interest in them. They've been coming down for a while. Is it amazing that they bounce fairly strongly? The answer is no. The question is, will they be able to stay up for a while? And my thought is that we're probably going to get in, see a lot of ABC downs in a lot of these stocks in the very near future. Probably not a huge amount before the end of the year. But my guess is that we're setting up very much for a very, very brutal next year, and probably a little lower into that. But too many stocks out here with too light of volume on the upside. They get all this volume all at once, and we talked about that before, which is a real Tim Ward thing, which is you want like maybe 200% volume on a breakout, maybe 250, 300%, something like that. That's good. You get 800% or 1,000%, then normally that's an exhaustion move, and it just blows off the top, and that's it. A lot of times you'll get up with like 100% or 80% of the volume, and then the stock folds like a $5 suitcase. So it is kind of a three bears kind of thing. You want it just right, and it's not always that way. Other stocks of interest out here that I've been watching, of course, Men's Warehouse. I don't know how much more you can say about that, other than if you go on YouTube, there is a great video from Saturday Night Live, maybe 4 or 5 years ago, about Men's Warehouse and getting 10 suits for the price of one. And the people are using the suits to mop up spills in their house. They're cheaper than the paper towels and everything else. But it's very interesting to see this thing take the kind of 50% loss in one day. But again, bull markets rarely have this kind of feature in it. In fact, Mr. Buffett has a famous saying that he got from somewhere else, but a lot of people attribute it to him. I've seen it in the press back into the 1920s, and that is, if you want to see who's been swimming without a bathing suit, just wait until the tide goes out. And that's why a lot of these stocks, you see these kind of dramatic moves right now. Huge short interest. If they make it, they squeeze. If they don't, they collapse. And Men's Warehouse is one of those. They did a lot of discounting, a lot of coupons. They tried to get rid of that, and it just hasn't worked. People are going elsewhere to buy their suits, if they're buying suits at all. I see the guy that wants to be on Shark Tank, is this real big investor in California, said he wouldn't be on Shark Tank if he had to wear a suit. So I wonder if that's maybe even more telling out here than anything else. Other stocks of interest, we've been talking about all these stocks that have been hanging out at highs in the housing industry, and one of the ones we can look at out here is Mohawk. It is down, and it is down with a volume today. It looks to me like we've probably got a good chance of the 174.49 being tested. Unfortunately, this is one of the Buffett companies, so keep an eye on that. He owns enough of this that he can kind of dictate the price on it. Unfortunately, to do that, he has to buy more shares, but he owns a good amount of them. And it's not uncommon for Mr. Buffett to move the shares of his companies from and to margin stocks so he can cause his own short squeezes. I would be worried about that. He tends to do that very late in the game. At the top of the markets, it's the easiest way to get out, is create your own short squeeze and sell the shares back to the people that actually need them. Pretty ugly out here. We talked about A.O. Smith, so let's take a quick look and see how that's also reacting. It is going higher. We've talked about how this thing has been kind of going up against that July 23rd high that had 1.9 million shares. Today we got 651,000 shares. And so I'm starting to see maybe some loose bricks out here in some of the houses. There was another one I had in my newsletter this morning. I can't remember which one it is, but that's it. What else? There was a few other ones. Had MU, Hain Celestial on my radar today. H-A-I-N. The Hain Celestial Group, it has gapped down back to this long-term gap. And thanks for Tom O'Brien for always teaching a lot of this gap theory out here. Volume is not what the gap up was yet, so we're going to watch this one toward the end of the day. But HAIN gapped up, Hain's Celestial, on August 20th of 2014 on almost 8 million shares. We're back into that gap finally with 4.6 million shares here today. So maybe there is going to be some kind of basis that you can buy out here. I'm not exactly sure why the earnings were so bad. I'm going to have to dig. Like I said, I'm going to have to dig. This is going to be a big weekend for me digging through data, because a lot of this stuff at first blush doesn't make a huge amount of sense. Some of these things are coming with volume, and then the next 2 days they just gap down again, volume or not. And like I said, that pattern started kind of in August that we brought up here on the show many days, which is energy stocks got down to the lows, light volume, and then all of a sudden, boom, the volume came in, they gapped away, and that's it. And I continue to see a lot of stocks that you think would probably bottom out and have not. One of the reasons I think they are doing this, we've brought up many times. In fact, I was talking to Andy Heck right around noontime, a little bit after. He's writing a big article that will be out on Monday, and asked my opinion on it, on deflation and inflation and stagflation. But I just gave him some things that I thought might make it a slightly better article. I think it was very good. So I'll look forward to that on Monday. Maybe you all should too. But very interesting to see exactly what's going on some of those. But what I wanted to bring up, if I can find it here, is the Baltic Dry Index. Because we were talking about what happens in markets like this. And I said, how can you say that there's inflation? I need to move this to another tab, to a new window. I've done so. Okay, there we go. On Bloomberg Business, the symbol is BDIY. But, you had a nice chance for the Baltic Dry Index to give us some kind of belief that the economies of these big countries were doing something, especially after we got the bounce when China started manipulating their own markets. But it just hasn't done anything. In fact, it's gotten a lot worse. Let's go back here and look at it. And it certainly looks to me like we're going back to these lows that we saw starting in February of, what is that? Yeah. Is that February? Yeah, February. That ran all the way through midsummer. Now, we had that kind of bounce, but it looks to me like it's a bounce that has given up. And we may even see lower prices out here. Talked to somebody in the den earlier also, and he was bringing up about, there's just no demand for these. I did bring up a few things that were very interesting to the argument. And that was that I think it's either 95 or 98% of all lead in all car batteries in the United States is recycled. Only about 2% of lead for new car batteries actually needs to be mined each year. And, whether it's lead or actual copper or just steel for cars, everything is being recycled these days. And that really does put kind of a long-term hitch in it. The idea, though, is if you're building something new, i.e. lots of buildings in China and you need lots of steel, you're not going to get that from cars because that's being recycled already right back into the cars. But if you need a whole bunch of new steel, you're building big ships, you're building aircraft carriers, you're building new, 60-story high-rises, you're going to probably be using new steel. And this gives us a good indication that there isn't anything out here that's truly, whether it's crude, whether it's, and I think a lot of that also in this Baltic Dry Index was crude for a little while. It looked like a lot of people were starting to store it, using these ships as storage vehicles. As soon as the price started coming back down, so did the Baltic Dry Index. And that's, until I see a bottom in this, I'm going to remember or stay, especially in the S&P, maybe a little less so in the NASDAQ, extremely nervous about being long, even if we get into December out here. But that is my treatise on that. Yeah, ooh, ouch. Not any good at all. What else do we have out here? We talked about Priceline. We looked at it. Wanted to see if there was anything else out here. We talked about Facebook. Oh, EOG Resources. Wanted to take a quick look on it. It's down about 2% today. But I think you can start making some cases that these things are ready for their ABC downs. And if we just take a nice little pop on this one, it also has a fairly nice confluence level. Let's clean this thing up just a little bit out here so you can see. I think it's a little bit better interpretation of EOG. Let's also zoom into that. This thing has gone right to the confluence level, $80.53 to $89.71, and it kind of started to pull back here a little bit today. But I don't think that there's a whole lot more in these stocks right now. And I look at the Baltic Dry Index. I look at the price of crude. What do we got out here today? 44.34 off another 86 cents. This thing looks to me like it's going to try $43 probably Monday or Tuesday in crude, and I would not be surprised to see it break it. With the dollar index at over 99, I could easily see more movement when we get China coming back in Sunday night and see the dollar index hit 100 on Monday, maybe Tuesday. The Fed will probably, and the Treasury will probably be out there trying to hold it back. But my guess is that today's jobs number made it probably impossible for them to do so anymore. And even them holding it back also probably just created more energy for this thing to break out. I was looking for 100, at least a retest of the previous dollar index. And we'll see how it tests that 100. And I know a lot of people are doing the numbers on it, and they're coming up with 102. Oh, Andy Heck wants me to talk about Chipotle. I wonder I should do this. I guess I will. Anyway, our conversation today with Andy, and he was saying we were talking about VW and some other stuff, and I said, Chipotle and VW, you know what they have in common, don't you? The customers all have obnoxious and bad fumes coming out of them. Just a thought. You'll have to dig deep for that one. Mission problems is exactly the word. The EPA is going to be following the Chipotle customers around for a while. Anyway, EOG was one of the other one out here. See what else we had. Cree's off a little bit. This thing's been kind of going sideways. It's hard for me to see how they ever get the pricing power back that they've had before. But down a little out here today. This thing's probably going to come back and chase around some of these lows. The last one was $23.11. There's just not a great deal in this. Could volume continue to come out? Maybe this thing make a run for 30? I think it could, but we've been making a case for a long time. And in fact, we were shorting this thing, I think, in the Tech Insider in the 60s. And it's very hard for me to believe that there is anything other than lower and leaner margins coming for Cree anytime soon. Volume, of course, did pick up, and we'll talk more about this when we come back. In the meantime, give me a call. We got plenty of time in the last little segment. 877-927-6648. You can post a message in the den if you want me to look at something. And, of course, email me at path@tfnn.com. He said. I'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And Insight. Boy, I tell you what, these biotechs are heaven and hell, aren't they? Just given 5 minutes. Earnings out on Insight, INCY. They are an oncology drug company, basically saying things are not going to be well for a few months or even a few quarters, going out down on tremendous volume today of 6.1, almost 6.2 million shares already today. Next support kind of got to there today. My guess is it's going to work its way down there over the next few. That's the September 28th low at 98.21. Only had 3.5 million shares. You got double that already. So I think you could say that there's a good opportunity for some of these to fall out of bed. Let's take a quick look at the IBB today and see how it's reacting to some of these. I think you can make a case that we're headed back down to the lows again. You know, we kind of get into it, test it, come back up. But to me, a lot of these things are right in these retracement zones of feast or failure. And especially on the IBB, not a lot of volume in the last few days. But again, that pattern is that you get some real light volume, and these things either fall out of bed or go to heaven. Just looking at the IBB, doesn't look like a lot of these stocks are headed back up to heaven. Look like they're headed for a little bit more warm and toasty place in the near future. But I think you can say that we're looking at this getting up a little bit over its 618 retracement. That would have been 335.08 for the 618 on the IBB. If we go back a little bit farther out here, let's see if I can come back in here and just pull this out. There we go. 335 went a little bit back over it, but it's back into it now. So you could look at this as an expansion, as an ABC down from this move. And if we go for an A there, a B there, and a C a couple of days ago, I think you can make a decent case that we get back into these double gaps, which is I've been waiting for the IBB to get back to. There's one at about 262 to 265. There's another one out here. These are all around the October 20th, 2014 days. If you go back, you'll see these gaps that have remained open. Anyway, the one-to-one would take you in the IBBs back to the 260-16s. Again, I don't think that it's all going to happen one day, but I think as we see, especially the beginning of the year, as we start seeing politics really enter into drug pricing, would not be surprised to see a lot of people starting to and continuing to exit, knowing that they're going to spend an entire year next year hammering these companies. I think we're seeing a lot of distribution already as people have gotten out, but I think the real damage, or a lot of the damage, is still yet to come in these. But that would be what I would be afraid of in these, and we may even have that ABC already setting up. So we'll watch those closely. I think it could bounce around between that 284 level and this level for a while as it builds cause, but eventually it's going to bust that, and I think at least cover those two gaps down to 260. Anyway, it is going to be a very interesting closeout here, one where volumes are going to be very interesting. We're off about 7 points on the S&P cash. They've tried to push it back higher a few times, and it just looks like all the volume comes out. As we close the show, about 3.1 billion shares on the New York Consolidated Tape. Volume has been good all week, up and down. So I think it's more about how we close this week out than anything else. And we've got Tom O'Brien in the next 2 hours. I'll be back in the 4 o'clock hour to talk tech with you. Talk tech and talk turkey. We'll do that. Anyway, so when you can, not when you have to. We'll see you next.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.